Good morning, folks. Saeed is still out of commission, and Mr. Hackett has asked me to come up with a watch list for him. And so here we go. We had our first break of support in the S&P in quite some time yesterday. And so we had actually about a 200-point down day in the Dow and a little bit of nastiness in the S&P. We're getting a slight gap up this morning, but we'll have to see if this kind of supports hold, because if they don't, we could get a flush back down to the 50-day or 200-day moving average. One of the things to always remember is, even though this market's been red hot, is that, we are at the top of the range, and it's much easier to get the big runs and the big moves, from the bottom to the top than trying to grind it at the top. We'll have to look for signs of distribution, and you can even see, like, if you're looking at different breadth indicators and stuff. We've been stuck on the T2108 in the 90s and 80s for quite some time, and that's actually really rare. That level of overbought we haven't seen in some time. And not only that, but we stayed there for quite some time, so we've had a pretty cool run. It would be nice to get a little bit of a nice, easy-go-lucky pullback to kind of reload some of these energy plays and things that we've been doing. And then we'd have to watch, right? If we don't hold at these supports, then we can always go to the bottom of the range. It's important to remember that things always look great when you're always at the top of the range, and things always look awful when they're at the bottom of the range. But think about what the moves that come afterwards. Some names to watch. A lot of these oil names had some big flushes yesterday, and you could tell they're really, really extended. This one, TRGP and WLL, ran right into its 200-day moving average, and they're getting slight gap ups. What I'd be looking for on something like this is a possible green to red move where that light gap gets faded and you can potentially short it. I'm not sure they're ready for longs just yet, but something to kind of keep mind. If you did see a big run in oil stocks, you want to stick to names like this MEMP that are not extended. That way, you're not up there chasing anything. This Expedia had earnings today. It looks like it's breaking our 200-day moving average, so this could be in play for a potential long. Same thing with this Amazon. You can see this Amazon's right at yearly highs. Now we'll have to watch with Amazon is, does it fade back like Facebook did yesterday, as it is gapping up $75? Or, does it pull back slightly at the open and then take a go? We'll have to trade what we see. This ETE is really up a couple 100% in the last 10 days. And so this type of light gap too could potentially get faded, on a green to red. So something to kind of keep mind on this one. You can see this gold is still really, really hot, and I think it can still be day traded to the upside. It's not too extended, even though it looks like it is, because if you're looking at the actual chart of gold, this was a key level breakout today, and so there's a key breakout today, so this nugget could have more. Think about this as you would like DWTI when it was making its run. It was at $200. It was really extended up a double, and then it was the next thing we're talking about $300. Then we're talking about $400 and $500. I'm not saying gold can do that or anything like that, but it's a very similar setup that we had in oil, where DWTI did that because we broke this bear flag, this consolidation, right? So when we broke this consolidation, essentially DWTI went on that huge run, as it's an inverse, and now gold is having a big consolidation. And so that's something to be mindful of, to say, this is a pretty big consolidation, and that typically says that there's more upside, in play on it. So, always be mindful that an ETF is just an ETF. A triple X ETF follows the main ETF. Another one that I really kind of like, and I think is going to be good for day trading opportunities, is CLF, if the commodity stocks are running. You can see when the commodities faded off, this thing went from $5 to $5.20 in a hot second. But the earnings sounded like they were pretty good, and it had a huge run, and you can see this thing has a lot of volume, and the float's fairly low, and it does do follow through, and so we want to keep an eye on that. And then this Tesla is just kind of hanging out right now with all the FANG stocks really weak. Google's been weak, Microsoft's been weak, Netflix has been weak. This one is having trouble breaking out. So, it may need to come back to the bottom of the range before it resolves itself. And so it's really not that day tradable just yet. till this range breaks. And then what you'll see is when the range breaks, all the dips and all that stuff that you see is a lot easier to play. But right now, what's happening is these spikes are getting faded off. And so when it spikes, you want to buy it because you're thinking the range is going to break, and then fades off because the range hasn't broke yet. Once the range breaks, then the spikes dip and then they hold. So just something to kind of keep mind of. And then, if the market does hold up, keep an eye on this FEYE2. Right now, it's still stuck in a range, but, it's a very similar thing to Tesla is that, the spikes are getting faded off, but if the range starts to take off, then the day trading would be much easier in it as now you have the wind at your back. So that's it for now, folks. Remember, green to reds on the oils and the metals. Put Amazon and Expedia on your watch list, and we'll be good to go today. I'll see everybody in the chat room. I don't know how to shut this thing off.